Hey guys, there are two very popular approaches towards paying off debt. One's the debt snowball and the other is the debt avalanche. On our journey towards becoming 100% debt free, and that's total debt including mortgage debt, there's one approach, in my personal opinion, that's absolutely superior. So today I'm going to speak to you about how to pay off debt fast, comparing the debt snowball to the debt avalanche method. To make this video really practical, I'm going to be demonstrating on my whiteboard behind this camera, and also I'll be sharing my spreadsheet and sharing a bit of an Excel demonstration for you so you can see which method leads to you ultimately saving a lot more in interest and paying off that debt a lot faster, but also considering which of those two methods might be better for you if you're the type of person who prefers having small wins built into their debt-free journey. My name's Ken of the Humble Penny and Financial Joy Academy. What we do on this channel is to give you guys the tips, the insights, the practical hacks to help you work towards a dream life of financial independence and money joy. Debt freedom is the dream of anyone who's seeking that exciting journey of becoming financially independent and completely debt-free ultimately. So I hope these tips will help you really make the right decisions about what approach you take towards paying off your own personal debt in order to do it more efficiently, but above all, to save you some money on that path towards becoming debt-free so that you're not paying out too much money in interest and you're doing it in a way that's super efficient. Let's dive in now and look at debt snowball versus debt avalanche. Guys, to illustrate the difference between these two methods of paying off debt fast, I'm just going to use this example of a real life situation where we have an individual here who has 5 different types of debt. So they've got unsecured loan, they've got a car loan, they drive a really nice BMW, they've got credit card debt for some loans that they've built up from maybe sponsoring a particular lifestyle. They've got student loan and they've got overdraft debt. And you can see the balances here. And also I've put the rates of interest that they are paying for those various debts that they've got in their lives. And you can see that the rates vary. So for the really expensive debt, such as your credit card debt and your overdraft debt, that person's paying a really high rate of interest of 34.1% and 31.3% respectively in this particular example. And then for other types of debt, they're paying much cheaper. So for example, the unsecured loan is 7.5% and so on. And the question is which method should you choose if this was your current situation? Chances are you've got a debt profile that's not too dissimilar to this. You will have different types of debt in your life at the moment. You might even have in there mortgage debt, for example, which most people have. And we had on our own journey towards complete debt freedom. So for our profile, we had mortgage debt in here as well. Okay. Now, if you're looking at these two methods, just to explain what they are using this example, the debt snowball is the methodology whereby you would assess these debts, but essentially what you'd be doing here is saying, well, actually, I would choose to pay off the debt in order based on the smallest amounts first. So if you were doing debt snowball, you'd be saying, okay, so what I'm going to do first is I'm going to pay off the 4,500 first, the overdraft. Then you'd say, next I'm going to pay off the car loan next. Then you say, after that, I'll pay off my unsecured loan. And after that, respectively, you can see the trend. You would be paying off the credit card, and then you'd be paying off the student loan. Now, that's a good method to focus on if you are the type of person who loves having that motivation built in. You love the idea of small wins in your life. You love the idea of seeing the small debt disappear, then the next one disappear, then the next one disappear. And that's a really good method for a lot of people, okay? But on our personal journey towards financial independence, the method we chose is the second method, which is the debt avalanche method. And what that does is, that method is the more efficient way of paying off your debt. Because what it does instead is it focuses instead on the debt with the highest rates of interest, i.e. the debt that's costing you the most money. And the reason we focus on that is because it will be saving interest rate that you'll be paying out otherwise, essentially cash flow. You'll be paying out a lot less in interest via the debt avalanche method is what we found in our scenario. I'm going to be walking you through a practical example of this using these numbers, but on an Excel sheet, so you can see what level of interest we could potentially save for this particular hypothetical example, and also how quickly, which method will lead to us paying off the debt a lot quicker. Okay, so for the debt avalanche method, what we would do, we would say, this is an interesting set of debt, but what we would do instead is we'll tackle the credit card at 34.1%. Okay, we'll take that one down. Now, it might take us a lot longer, and it will take us a lot longer, but we will focus on being efficient and tackling the debt with the highest level of interest. Next, we'll come back and tackle on this overdraft, even though it's only 4,500, but it's costing us a lot in this hypothetical example. So we will tackle that next. Next, we will look at our debt profile and focus on the car loan at 8.9%. Okay, then next will be the unsecured loan, and then finally we'll come down to the student loan at 6.5%. Okay, so let's now walk over for this to make a lot more sense, so you get the idea hypothetically about the debt snowball, you needing the small wins and paying off the smallest amounts first and then building up to the largest, which is a credible method, by the way, and it might be more suited to you as an individual. But to me as an individual, with my wife on our journey towards 100% debt freedom and doing it in less than 7 years across mortgage debt and all forms of debt, whether it be credit cards and so on, the method we focused on was the debt avalanche. I'm going to head off now, share my screen and demonstrate using these numbers what impact the method you choose could have on how quickly you become debt free, as well as how much money you could be saving potentially in interest overpayments. Okay, so a quick demo of the debt snowball versus the debt avalanche using this spreadsheet. So this spreadsheet will tell us what the big differences are from an interest perspective. So here we have a hypothetical example of somebody who has 5 different types of debt: an unsecured loan, car loan, credit card, student loan, and an overdraft. So here are the balances, and here you can see there are varying differences in interest rates, so really high interest rates with the credit card and the overdraft, and then much lower interest rates on the unsecured loan, car loan, and the student loans. Here are the minimum payments that this individual is required to make. Now, let's say that they've got £2,000 per month as a budget to put towards their loans. The question is how should they distribute this amount towards these various debts that they have? Should they use the debt snowball or should they use the avalanche, and why? You can see that the total required payments are £1,115 here. Total debts that they have is £73,500 here. Okay. Now, if you look here, let's say we chose the debt snowball, starting with that first. You notice that the debt snowball here at the bottom of this table arranges the debt snowballs such that the first debt balance that they pay off is the smallest debt balance, followed by the next one, followed by the next one, followed by the next, and so on. It keeps increasing. So it starts with the smallest and all the way to the largest. And it disregards the interest rates. Okay. Now notice what happens with the debt snowball. They are able, with the excess that they have of £885 in this example, they're able to pay off the 4,500 over a period of 6 months. Okay, you can see that happening, and then we can see their debt-free period happening here. Okay, so 6 months, within 6 months they would have paid off. Then the next debt, which is the car loan, they would then pay that off over the next 13 months. You can see the motivation there, because there are small wins built into paying off debt in this way. And that's interesting. So 6 months, and then 13 months for the next, and then 18 months for the next one, and so on. But keep an eye here on the total interest paid. Let's write that down here, 31,796 spot 20, okay? And they're debt-free in Feb 2025. You can see that? Okay, now let's compare that to the debt avalanche. With the debt avalanche, we are focusing specifically on the highest interest debt, okay? Because we want to pay off the debt that's costing us and hurting the most. So you can see this table has arranged it such that the highest interest debt is the credit card at 34.1% in this example, followed by the overdraft of 31.3%, then followed by the car loan of 8.9%, okay? Now, notice the difference, okay? Again, the debt from an interest perspective is £11.92. Notice the difference there. You'd be saving, if you were this individual, if you focused on the avalanche method, £6,784.28 in interest, okay? And get this as well, you would be paying off the debt a lot quicker in November 2024 compared to Feb 2025, okay? But as mentioned previously, the motivation for focusing on the debt snowball is that you get that motivation, you get those small wins. Psychologically, those small wins matter, because look, keep an eye on the debt avalanche. The first debt will take you 32 months to pay off, which is almost 3 years to pay off that first debt before you can say, yes, I've done it, I've paid off that first debt. Then the next one will take another 37 months. So it's a much more efficient way to pay off your debt because you're paying a lot less in interest. As we can see here, you'll be having a lot of savings and you pay it off a lot quicker. But I think it really then depends on the type of individual who you are. So if you're somebody who needs those small wins, then the debt snowball will be suitable because you can see those small wins happening here within 6 months, and in 13 months, you'll be paying off various bits of debt and they'll be completely out of your life. But you'll be paying a lot more in interest as a result of choosing that particular method. So which method would you choose in your life? Are you currently paying off some debt? Which method are you currently using? Please let us know in the comments below. Okay guys, so there you have it. What do you think is the better method? Is it debt snowball or is it debt avalanche? Which one are you currently using in your own life right now? And why are you using that method? Please let us know in the comments below. I also made a video not too long ago called How to Decide Which Debt to Pay Off. It's a slightly different take on the debt snowball and avalanche, but takes a view at our debt from the perspective of urgency versus importance, okay? I'm gonna put a link to that and above as well for you to check out. Do make sure you watch that if you're somebody who's absolutely working towards this journey of complete debt freedom. If you really enjoyed this video, come on, please make sure you hit that like button because it really helps to encourage a ton more people to engage with our videos here at The Humble Penny. If you're new to our channel, we're friendly people here. Make sure you subscribe and make sure you come back and watch some more of our videos. We'd love to have you back, chilling out with us and becoming a part of our community. As you're doing that, do make sure you hit that notifications bell because what that does is it helps to notify you when we publish our videos, typically twice a week on a Tuesday as well as a Thursday. Guys, it's been fun talking about debt. And I hope you can be as excited as I am one day if you're that person working towards debt freedom, because this journey of becoming debt-free and 100% debt-free is totally worth it. Okay? All right, take care guys, and I'll see you soon on our next video. Bye-bye for now.